Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making lots of money or you need help making more money, this is the channel for you. Click subscribe and give me a thumbs up for this content if you like this content. Today we're going to talk about physical precious metals. I haven't done a clip in a little while on the physical side, but there's been a big change in the prospectus to SLV, and I want to cover that first. So first, Silver ETF SLV admits trouble sourcing metal and vulnerability to dramatic short squeeze. The Silver Exchange Traded Fund, SLV, appears to have just amended its prospectus to acknowledge difficulty in sourcing metal for the fund. The amendment warns that the fund may now be vulnerable to a dramatic short squeeze, like the recent short squeeze in GameStop shares that caused a worldwide sensation. The change cited by Billion Star tonight on Twitter seems to have been prompted by this month's Reddit-inspired movement to attack shorts in the monetary metal. SLV does not appear to have issued any announcement of the amendment to its prospectus, perhaps trusting that monetary metals advocates would find it eventually and save the fund the trouble of alerting the markets. A couple of things I want to touch on down here. The demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares. And I like this one down here. It says, in turn, those repurchases may dramatically increase the price of the shares until additional shares are issued through the creation process. This could lead to volatile price movements in shares that are not directly correlated to the price of silver. So, looks like they're scared and they're running out. So, the plan of draining the physical metals around the COMEX and then attacking PSLV and SLV because they have to take the metals off the COMEX has worked. So, the physical metals are now, I would say, very short, in short supply. And I would be probably looking at physical precious metals to accumulate. Now, if silver becomes short, what I think is going to happen is if you kind of step back and take a big picture view, it's going to alert the world that there's shortages and a scam on the COMEX. So I would say that all precious metals are game on, because when silver runs out, what do you think people are going to do? They're going to run to the other physical precious metals and obtain those metals. So let me go into, if this money were to rotate towards the physical metals, what would prices look like? And how much physical precious metals are there above ground? So I put together this presentation on how much physical precious metals there are above ground. So first I'm going to go into bonds and stocks, because this is the money that's going to be rotating out and going towards it. There's a bunch of 14.4 trillion in US Treasury debt, 9.2 trillion in mortgage-related bonds, 8.8 trillion in corporate bonds, 3.8 billion in municipal bonds. Total, 36.2 trillion. We've got a US stock market at 30 trillion, paper money at 1.5. Worldwide, there's about 100 trillion in assets. Total debt, 188 trillion. Now, I'm gonna put something towards the kind of the average of this. So what I'm gonna say is the total assets is about 145 trillion. Because remember, they're creating a lot more as well, a lot more money, and it's kind of hard to get an exact number on it. Now, investable ounces above ground. Gold's at 3 billion, silver's at 3.5 billion ounces. Platinum's at only 8 million ounces. That's ridiculous. And there's no inventory of it. Gold, on average, about a half ounce per person. Silver, about a half ounce. And platinum, I'm going to round down to 0 ounces per person. That's how rare it is. And if this money, just 10% of the assets, were to go after investable grade precious metals. Now, this calculation is far low because that money is going to go after far fewer ounces. It's not going to go after the 3 billion because 3 billion aren't available. It's not like people are going to sell and we're going to have 100% turnover of gold. It's probably far less than that. But gold, if you were to calculate it this way, would be 5,000, silver 2,000, and platinum at 181,000. Now, I don't think the money's going to be divvied up exactly like this. I think more people are going to go after gold, then silver, and then platinum. And I think gold will probably be $15,000, $20,000 an ounce. Silver's probably going to be somewhere around $1,000 an ounce. And platinum's probably, I don't even know what platinum's going to be because it's so rare, nobody owns it. And I do want to touch on something. I was reading the comment section and I made a comment about silver. I said, the value of silver to society is greater than gold. Therefore, silver could be valued and priced higher than gold, or at a ratio of 1-to-1 even. And someone said that's impossible because the scarcity of gold in relationship to silver. Now, my question to you would be, platinum is 375 times as rare as gold, above ground and investable format. And I just showed you that silver and gold are roughly the same on a 1-to-1 relationship. Now, if platinum is 375 times as rare as gold, why is it cheaper than gold? Right? Crickets. Because it is value to society and the supply-demand balance that sets the price of these items. When silver goes into a deficit, which we're going to hit any second now, because investors are pulling the silver off the market, we're going to see where that top is and where the value is. And I think it's going to be far in a land far away from $25, $26, $27, $30 an ounce. Far away. I think platinum, if someone were smart, I would be accumulating platinum because it's far more rare than everything else. There's no inventory of it. It's considered a strategic material or metal to society and to nations, and there's no inventory of it. And there's hardly any investable ounces above ground of it, only 8 million ounces. So when people run after silver and silver becomes scarce, what do you think they're going to do? They're going to run after gold and they're going to run after platinum. They're going to run after alternative precious metals. And if people were to get scared worldwide and any sort of percent of that total assets were to run after these metals, those numbers are going to go way higher. And I think someone did the analysis. This was a long time ago. So this is going to be far higher than where it was. If gold were to account for all the paper money in the world, gold would be priced at $250,000 an ounce. So it depends on what happens worldwide. What if how many people get scared into this? And it's gonna drastically reprice the metals in ways that we can't imagine. And it could happen overnight. It could happen very quickly. It could happen in 2 or 3 months. I don't exactly know, but the repricing could happen very quickly. So what I have done, I've researched the living hell out of this stuff. I knew a day like this could potentially happen in my lifetime. So I prepared when the ratios were extremely cheap. Now, if you're looking at it from this perspective today, platinum is extremely cheap in relationship to all the other metals. And I think it is a good opportunity to purchase platinum, even though all the guns are pointed at silver. That is where they're pointed today. But where are they going to be pointed after silver's gone? They're going to run towards platinum and gold. And they just monetized platinum. Platinum is now a monetary metal. I had always thought that platinum is a monetary metal. So what I would do with my money, if I didn't have any physical precious metals, is I'd probably buy a little bit. I don't care if it's 5% of your portfolio, whatever it is, I'd at least have a little bit just in case something happens. Just in case everyone runs at this. And I also am playing it through the producing companies. Companies like AG, EXK, FSM, Mag Silver, MAG. Those mid-cap, larger silver producers, they're going to go through the roof because they produce silver. And if silver goes through the roof, they're all going to go through the roof. So I have a wide variety of producers. So that's how I'm playing this. And I've also put a little bit more leverage on it through options as well, just in case something were to happen. I got some August contracts in some of the companies, and that's how I'm playing it, just in case. And I also have MUX options just in case as well, because they were priced literally dirt cheap. So that is my take on this. I think we are at a critical point where the money could potentially turn its guns and just start running at all of the precious metals. So we're right there. That's where I think we are currently. You can see that they're panicking in the SLV in terms of changing their prospectus because they can't source the physical metal. Let me know what you guys think in the comment section. What are you doing to prepare for this? Are you already prepared for it? Is my question. And if not, what are you doing to prepare? And if it's nothing, that's okay too. That's up to you. Again, if you haven't subscribed to the channel and you like this content, subscribe, get these updates, give me a thumbs up, and thank you for listening. This is Finding Value.